Hello friends, today I am going to review infoedge, the promoters of nowcareer.com. So infoedge has so many domain businesses, so out of which the main four businesses are nowcareer.com, 99acres.com, jeevansati.com and shiksha.com. Nowcareer.com is the online job portal. 99acres.com is the real estate classified site, and Jeevansati is the matrimonial site, and shiksha.com is the educational classified site. So a brief story about its starting. So it was started by Sanjeev Bikhchandani, who started off his career in Horlicks. Later, he started two firms with his friend. One was infoedge, which was making salary reports and surveys for the corporates, and another one was Inmark, which was making pharmaceutical trademarks for the companies. So later they part way, they split, and Sanjeev Bikhchandani got infoedge, and his friend got Inmark. So in around 1995, when he visited the Prakriti Maidan at Delhi, he saw an exhibition hall, a stall showcasing the internet. It was showing the importance of internet and the future possibilities of internet. So impressed by the possibilities with the internet, he contacted his brother in US, and he hired a server to make an online job portal. So that's how the story of that's how the Naukri gave birth. So if you look at the timeline, in March 1997, Naukri's first website launched. In 1999 itself, within 2 years, it became break-even. So it was making so much of revenue. So within 2 years, it became break-even. In 2000, they secured a venture capitalist funding of 72 million. So soon after securing the venture capital funding, they became profitable in September 2000. And 2003 they started TV ads. 2004 they acquired jeevansati.com. 2005 they launched 99acres.com, which is the second major business for them, which is a real estate classified site. And 2006 they launched Naukri for the Middle Eastern region. It was called Naukri Gulf. 2006 they were listed at the stock exchange. 2008 they made an investment into a startup which promoted Policy Bazaar. Right now they holds around 50% in it. And 2010-2013 they made a major investment into Zomato, which is their high profile investment and most profitable investment, for around $16 million. They hold around 57.9% at that time. Right now they possess around 19%, not 27%. So in order to discuss much about the business units, we can use a BCG matrix. So out of the four major business units, Naukri.com is a cash cow, because after 3 years it becomes profitable and start generating and improving revenues. I mean the revenues improved every year after year, and it became a cash cow for the infoedge. So right now it produces around 70% of the revenue, consolidated revenue for the infoedge. 99acres.com was started around 2006, and excuse me. So it passed through the investment stage, and a lot of investment has been burned right now it is a rising star, and it became EBITDA positive in financial year 2020. So it is expected to generate more revenues in the coming years, and becoming a cash cow for the InfoEdge in the future to come. And then there is shiksha.com, which is the question mark, which is in question mark stage. Like they are still shiksha.com still needs a lot of money to be burned in order to be profitable. Then there is jivansati.com, which is in dog stage. Like it needs a lot of investment in order to be in order to make it profitable. So these are the main major for businesses. We'll look at it in detail. Now it is Naukri.com, the cash cow. So initially they produced salary surveys and reports. So because of their expertise in that, they have understanding about the human resource business and the practices before launching the online job portal. So at that time in 1990s, online job portal was innovative. So they had around 1,000 jobs in the initial site, which was collected from 29 newspapers. Soon it became market leader with a market share of 70 to 80 percentage. So they have other sites catering into Middle East, which is Naukri Gulf, First Naukri, the entry level jobs, and IamJobs.com, which is a recently acquired job website of Naukri, which mainly focus on management jobs. And for InfoEdge, Naukri.com contributed around Naukri.com and the recruitment contributed around 70% of the consolidated revenue, and PBT, profit before tax, of 481 crores in financial 2020. Because of their subscription services, which is paid upfront, they also have a negative working capital, which is very good for the business. If you break down the revenue by product and industry, so 90% of the revenue is from the B2B sector, that is the corporates who wants to hire is the main client. So out of which resume database access to the corporates contributes around 58%, and job listing contributes 11%, and job seeker contributes only 11%. The main out of industry, IT industry is the main contributor. Recruitment firms comes next, around 26%. Services comes around 18%. If you look at the website traffic, it receives around 24.9 million in the last 6 months. It comes as the market leader. You can look at the category rank at 1. It's the data is from the SimilarWeb. Now we are looking at 99acres.com, their next major business. It's a market leader in real estate classified category, which contributes around 17% of InfoEdge. They have revenues from project listing, the ads supporting it, and rental and resale listing, and other value-added services related to this kind of listing. The major source of listing is from brokers. That is around 80% of listing is made by the brokers, but brokers contributes only 52% of the revenue, and the 42% of the revenue is produced by builders, who contributes only 20% of the listing. And they have a total listing of 9,18,985 as of December 20, with a total projects of 1,77,200 in under construction and ready to move segment. The good thing about the site is it includes all the detailed property listing. So the main competitors are Housing.com and Magic Bricks. Previously, they had a fierce competition with Housing.com when the time Rahul Yadav was the CEO of the Housing.com. So they became EBITDA profitable in financial 20, and much of the investment phase has passed. And look at the traffic. They have around 12.21 million users in within last 6 months, and out of the category ranking, they comes as the market leader. Now we look at the Shiksha.com. The company is in question mark stage. It needs investment for some more years. So the company is into higher education classified website with around 49,000 colleges listed. So any student who wants to contact college or want to pursue education into any colleges can use Shiksha.com. So in that segment, Career Dunia and Career 360 are the major competitors. Study abroad, they also focus on study abroad, and much of the investment has passed, but still it is a laggard, so it needs further burning of the capital. So look at the traffic. They have around 24.31 million in last 6 months. They rank around 6th rank out of education category. Jeevansathi.com, which is a matrimonial site, it's in dog category. It's in dog category because it needs a lot of investment in order to be profitable for years. So it's a third largest matrimonial player after matrimony.com and shadi.com. So, but still it ranks in number 2 in terms of traffic. And matrimony.com has a leadership in South India, while shadi.com has a leadership in North India. But Jeevansathi has a leadership in certain pockets of North and Western India. In Jeevansathi.com, listing is free, and the revenue comes from various other services like getting contact detail for the customers and other matrimonial related services. So it is still in investment phase, and it needs a lot of cash burning in order to be profitable. Gets around 5.45 million visitors in the past 6 months. It stands around second rank, but as I said in the previous slide. So if you look at the infoedge and Indian startup ecosystem, so infoedge has done a lot of services for the Indian startup ecosystem in order to create a vibrant startup ecosystem. So they pioneered the online job and real estate classified. They made it initially. They grew business, and they established as a different business in India, and they climbed steps as highly established angel investors and listed venture capitalists. So recently they introduced a venture capitalist fund called infoedge Venture Fund, a $100 million corpus fund, and it is a listed fund under regulated by SEBI, and they have a commitment from Temasek for 375 crores. Previously they used to invest to startup using through their startup investment holding limited. Right now they also invest through their infoedge venture fund. So through these achievements and the services they have given to Indian startup ecosystem, They can be always called they can be called as Indian version of Japanese SoftBank, and can be compared with the Japanese SoftBank. They have investment into so many startups have listed in the slide. So the main profitable, like I discussed previously, profitable startup was is Zomato and Policy Bazaar, out of which they have around 19% and 50% stake, and they also have stake in, excuse me, other startup like Happily Unmarried, which is into male grooming section, and ADA 247 edutech startup. A lot of high profile and exponential growth oriented startups are there, which they invested into. Now we are looking at the shareholding pattern. There is no shareholding pledge for them. The promoter holded around 41% in 2018. Later, they decreased to around 38.47% in December 2020, which is not a good thing. Out of the promoters, Sanjeev Bikhchandani holds around 24.65% in December 2020. Hitesh Oberoi, the CEO, holds around 5.05%. Both of them have actually decreased their shareholding, and their Endeavor Holding Trust also holds around 6.46%. Foreign institutional investors have actually increased their stakeholding from 32.81% in 2018 to 40.54% in 2020, which is a good thing. And foreign domestic institutional investors have decreased their shareholding from 14% to 11%, which is not a good thing. Now we are looking at the financial evaluation of InfoEdge. It has a market capitalization of 59,270 crore. So it is a large cap stock. So within 1 year only it became a large cap stock. Previously it was only near to mid cap stock, because you can see that previously the price of the stock is at 1,580. Within 1 year itself it jumped 5 times at around 5 times at 5,880. So currently the market price is 4,602, which is also around 13 times the book value of 347 rupees. So the price to book value is at 13%. Stock P is highly overpriced at 3,430. If you look at the industry PE, it is highly overvalued comparing with industry PE and other PE also. I mean, individual PE also, it is overpriced. ROCE and ROE both are going negative, which is not a good thing. So it means that it is does not using shareholders' money and the capital, debt capital, to generate profit. ROE also showing that the company is not using the equity to generate much profits. It has a face value of 10, so I can expect that in future there would be a stock split, and we can expect that if the stock price goes up, the company will benefit from stock splitting. Had around 1,551 crores sales last year, with an operating margin of minus 1.24%, which is not a good thing, and had a profit of 17.3 crores. So I believe that they were saved by the other income generated by the company, because they have a huge cash reserve sitting with them. So the other income from the interest revenue or rent income might have been saved them. In last quarter, they made around sales of 278 crore with a PAT of minus 5 crores, which is not a good thing. Sales growth also not impressive, like 13.9 percentage, and but EPS is impressive at 95 rupees. But still, the major chunk of EPS is coming from the other income, uh, like might be the interest income. The previously I discussed about price to book value, so the stock is overpriced. So we are looking at the financial return. If you look at the trend, it's slowly the revenue has been increasing steadily. So the company actually had around more than 200 crores in financial year 2009, and over 10 years the revenue has jumped 5 times. So impressive growth as a company. Even the profits also have steadily grown, even though the profits have gone negative in 2017 and 2020. But even the profits are impressive recently. 12 trailing margin, the profits are even better than the revenues they make. So I believe that other income might be higher. So if you look at the profit and loss statement, so they had sales improving steadily, and if you look at the other income, in 12 months trailing margin 1380. So like I said, there have been a huge increase in other income. So we don't know what is the other income, but I believe so. The operating margin actually decreased over years. Look at it was having 27, 26, 30 percentage. So over the years, operating margin actually have decreased. So believe that the company is not generating much of profit from its operations. But if you see, the net profits have steadily increased, like from 57 crores net profit in 2009 to 1220 crores in the trailing months. But still, the major contribution is done by the other income. Look at the same trends in the last few quarters. The other income has been going up, and the operating margin was better into June quarter, but other quarters were in negative. So they almost have a good net profit, out of which mainly contributed by the other income. We would look at the return on capital and capital employed, and return on equity, and return on assets altogether. So because infoedge is a company which has zero debt, so ROE and ROCE are nearly similar. So if you look at the trend, both are moving similar. So it has an impressive ROCE before. Later it decreased around 28 percentage, and ROEs also were very impressive before. Look at 19 percentage. Anything around 15 is very good, but right now it is below minus 10.82, which is not good. It also decreased in financial year 2017. Also, it decreased based upon return on assets. Also, previously it was much better. Uh, it improved in 2018 and 2019. Right now, it's actually ROE is less at minus 8.19 percentage. So I believe the company is not that good in generating good profits from the equity and the capital employed and from assets. Now we are looking at the risk as a company it faces, the debt factor, if you have debt to equity ratio, the interest coverage ratio, how much debt it have, everything. So infoedge has zero debt, so there is no need to consider debt to equity ratio and interest coverage ratios. And like I said previously, it has a surplus of 2000 crores in the recent quarter. So it's too much surplus and reserves for them, working for them. And company also have a negative working capital. So it is much like getting a upfront pay for your operations, which is very good. Now we are looking at valuations. I mean, as an investor, whether you had to invest into the company or not, based upon the major values. So look at the book value. Book value was actually 80 rupees in financial year 2011. It improved to 207 rupees in financial 19, and financial year 2020 it decreased, but in trailing margin I believe the book value is around 347 rupees. So it's better. Over the years company has increased its book value, but if you look at the price to book value, all the time the stock were expensive. In financial year 2011 itself, it was trading at 8.4 percentage of price to book value. Right now also I have discussed in previous slides, it trades around 13.3 price to book value. So the stock is highly overpriced, related to industry and unrelated to industry as well. Like I said then previously, the price to book value is at 13.3, which is very high. And P ratio, look at the P ratio. It's 3,430 times the earning it makes. So the stock is highly expensive. We are looking at the SWOT analysis, peer analysis, the price charts, and I will give my insights. So here it's a company with a low debt. Like I said, there is no debt for the company, which is impressive, and profits are going in the past 2 quarters, and they have a moat in the industry. I mean, Naukri.com is a market leader. 99acres is the market leader, so they have a unique moat in the industry. So there is a strong cash generating ability from the core business, which will help them in long run as well. and there is no promoter pledge, and FIA is increasing their shareholding, and growth in net profit quarter of quarter, and ROCE actually improving last 2 years. But as a weakness, mutual funds have decreased because mutual funds might have been taken the profits because the stock is slightly it is getting expensive. ROE, we previously discussed, ROE was declining, it went to negative, and ROE also decreasing. It has a highly expensive PE ratio, and if you look at the Petrosky score also, company has a weak financials. So the threats have been always, like I said, it has expensive valuations and high PE, and insiders sold stocks. So while in the previous video I had done the same comparison in which I discussed India Mart Intermesh, and it was trading around 91 times P value. So I was discussing, when I saw infoedge, I was surprised actually, looking, it was trading 3685 times the earning it makes. So it just says that it is highly expensive. But as a company, infoedge is a jewel. It has a unique moat in what you call the recruitment industry, online recruitment portal. It is a market leader in real estate classified. The Shiksha.com and Jeevansati.com, in future years, it's gonna be profitable, and it will boom. And later, the investments in highly profitable startups, it can make wonders for the company. But it's all dependent upon how you value the stocks. So if you look at when it was listed, it had only 145 rupees. Right now it went up to 5342 rupees. How many times it has grown? You just compare. But over 1 year only, it had actually jumped 5 times, which means that actually the stock became very expensive. And there is also another thing: the stock market is actually overvalued recent some months, mainly because of the quantitative easing in US market. Lot of foreign institutional investors are investing into Indian market and other emerging markets, so the stock becomes expensive. So from my insights, the infoedge is a very good company, very good management, has a unique moat in the industry, high EBITDA margins, and they have good investments in startups. So, but investors can wait for market correction because even the stock market is overvalued. So wait until you get it at a correct price. So, like disclaimer to other videos, make your own decision while you're buying any stocks. You can actually refer my videos, but your decision is yours. Kindly give suggestion about my videos. Thank you.